Think about this. War is happening. Global tension is rising. Fear is everywhere. And in times like these, what do people expect? Gold and silver should go up. Because we've always been told, when fear rises, money moves to safe havens. But this time, something strange is happening. Even during war, gold and silver are falling. So the real question is the safe haven story broken? Or is the market reacting to something much bigger than war? Welcome to Wealth Blueprint. Today, we uncover the real reason. No hype, just facts. First, understand this clearly. Gold and silver do not move only because of war. Their prices are driven by bigger forces like interest rates, real yields US dollar strength, profit booking ETF flows, leverage and margin selling. War creates fear, but macroeconomics controls price. High interest rates equals pressure on gold. Gold doesn't pay interest. It's a non-yielding asset. So when bonds or treasuries offer high returns, investors start asking, why hold gold when I can earn interest elsewhere? Right now, real yields are high, and that increases the opportunity cost of holding gold. Result? Money shifts away from gold, which leads to price falls. Point 2. Strong dollar is a silent killer. Gold and silver are priced in US dollars. So when the dollar becomes strong, these metals become more expensive for global buyers. For countries like India, Europe, or Asia, a stronger dollar means higher local cost. Demand weakens, and prices come under pressure. Also, during global uncertainty, capital often flows into US dollar and treasuries, not just gold. Point 3. In panic, even gold gets sold. Here's something most people don't understand. During market stress, people don't just buy gold. Sometimes they sell it. Why? Because they need cash. To cover losses, to meet margin calls, to reduce risk. So even safe assets like gold get liquidated. This creates short-term downward pressure. Point 4. Profit booking. After a rally. Another simple but powerful reason, profit booking. Gold and silver had already rallied earlier. When prices are high, smart money starts locking in gains. So even if new buyers enter due to war fear, existing investors may be selling at the same time. Net result? Selling pressure dominates. Point 5. Why silver falls. Even more, silver is not just a safe haven, it's also an industrial metal. It's used in solar panels, electronics, EVs, advanced tech systems. So if there's fear of economic slowdown, industrial demand expectations drop. That puts extra pressure on silver. That's why silver moves faster up, but falls harder down. Point 6. ETFs and leverage are amplifying the fall. Modern markets are heavily influenced by ETFs and leverage trading. When prices rise, leverage pushes them higher. But when prices fall, it works in reverse. Here's what happens. Price drops, ETFs rebalance and sell, margin calls trigger, more forced selling, price drops further. This creates a cascade effect, especially in silver, which is more volatile. So what's really happening? War increased fear, but high interest rates, strong dollar profit booking, forced selling are stronger forces right now. The truth is simple. Gold and silver are not falling despite war. They are falling because macro factors are overpowering war. If in the future interest rates fall, real yields drop, dollar weakens, then gold and silver can rise again. But right now the market is clear. War alone is not enough. Macro matters more. If you want real, no-nonsense market insights, subscribe to Wealth Blueprint. Because here, we don't follow headlines, we decode the real drivers behind them. Like the video and comment below. Gold moves with rates, not just war.